What is up, guys? Toss here. Welcome back to another video. So the stock market had a pretty rough day today. We had the S&P 500 down 2.4%. We had the Dow down 1.7%. And we had the Russell and the Nasdaq each down over 3.5% on the day. And today we're going to be talking more about the markets, breaking down some technicals, going over 7 stocks to buy now. And I also want to share with you guys what stocks I own right now and whether or not I think the stock market could be going lower from here. So if you guys find value, hit the like button, subscribe, make sure to go down below, get into the Discord chat, the Facebook group, get 2 free stocks from WeBull and $30 free from M1 Finance, and you can check out the Patreon. All of those are linked right down below in the description box. So let's get into it. And speaking of the Patreon, we were talking about this earlier in the day in the morning update video on Patreon as we were seeing the futures market dipping a bit red. And if you guys were watching the futures market in general today, they were red at first. Not this bad. I mean, the S&P went down 2.5%. They were down about maybe 0.5%. I think it was like 0.6, 0.7% this morning heading into the market open. And then all of a sudden, the market opened, guys, and this thing just collapsed. It actually pumped up a little bit at first. You guys can see here, it saw an initial gap down, opened a little bit above 3,900. It popped up a bit, but it saw a hard rejection at 39.25, and it was all downhill from there. In fact, guys, we see the S&P dropped over 100 points from this point, 39.24, where it was this morning, so the low point of the day at 38.14. So pretty much what we're seeing here, and we talked about this earlier on Patreon, was yesterday, the rally we saw yesterday. If you guys remember, we saw a nice pop yesterday. That ended up being a bull trap. It ended up suckering in a lot of buyers, and in turn, it dumped the next day. You guys can clearly see it. We did see a break out of the downtrend. We broke out of 3,900. That was very big, but we didn't break 39.30. But still, it doesn't matter that we didn't break 39.30. That was, I mean, it's still a big resistance. But even before that 39.30 test, we were still breaking out. So I'm sure a lot of people were buying into this rip up here, the breakout of the downtrend. But now that we saw today's action, it dumped off. It lost. The S&P lost all of the gains from yesterday and some. I mean, guys, look, S&P opened up at 38.70 yesterday, and again, it got to a low of 38.14 today. So it lost all of the gains from yesterday and some, and it looks like a lot of the people that bought yesterday, they're ending up holding the bag at this point. They're holding the bag at this point, and the truth is, based on this hourly chart, and you could probably see it on the smaller time frames as well, but we'll stick to this chart for now. This could test the lows, and by lows I mean from 2 days ago. If you guys remember, 2 days ago we saw a similar drop like this, not as bad as this. I'd say this was the worst drop for the entire past couple of trading days for sure, because 2 days ago, we did drop. I mean, we went to 38.05, but it was more of a flash crash. That happened very quickly, right? You guys can see it here. It was about 30 minutes to an hour. The crash, the little drop, I don't want to call it a crash, but the morning drop we saw, it was very quick. But today's drop, it was drawn out throughout the entire day. I mean, the bulls didn't win at all today, other than this pop from 38.30 to about 38.72, which ultimately ended up in another big drop, which hit a lower low, which means the downtrend continues. So today's sell-off, in my opinion, was for sure the worst for the bulls. Obviously, it was great for the bears. A lot of bears made money today shorting whatever they were doing. They made some money today. And at this point in time, I'm looking to see if we take out the lows, like I said, from 2 days ago. If we break 38.05 and we get into the 3,700 territory, I think the S&P 500, if we pull back a bit here on the 4-hour, and I've been on the channel saying this, guys, you know that if you've been following me for a couple weeks, when the market was at 3,900, 3,950, I was saying on the lower end of the uptrend here, S&P could get 3,800, 3,750, and at that point, nobody was really saying, oh, Stash, you're crazy in the comments, but a lot of people were like, oh, we could rip up even higher, no pullback in sight. And it looks like we're getting to that target, 3,750. I mean, if 3,800 breaks the lows from 2 days ago, we're going 3,775, maybe 3,750, right around the 180 SMA here on the 4-hour chart. So let me know your thoughts down below. I'd love to know what you guys have to think. Drop a comment. Hit that like button while you're at it if you haven't done so already. And as for me, guys, I didn't do anything new in the markets today. I'm still in a bunch of positions. That's no doubt about it. There's no doubt that I'm holding some stocks here. I'm also in cash still holding a decent amount of cash, about 30-ish%. Excuse me, guys. About 30% at this point in time. And let's quickly run through my positions. And number one, I'm holding some skills here. I added this yesterday. This is actually the only stock I added yesterday. I nibbled a little bit of skills at $32.05. I'm still holding on to that. SLV, you guys know my classic holdings for a while at this point. SLV, this went down 2% today. I'm still holding on to that. Tesla got hit pretty hard. I almost added a little bit more Tesla today. It went down 8%, but I didn't do it. If it goes down again tomorrow, if we see a leg down in Tesla tomorrow, I'm going to add more for sure. But at this point, I'm still holding on to my Tesla. Workhorse, guys, which let me tell you, I'm lucking out here on Workhorse because you all know I was in at $22, locked in at $30, locked in more profits at $42, and I pretty much rode the rest of the shares down. I'm still holding on to those shares. And we got some news today that the House Democrats have vowed to stop the U.S. Postal Service contract with Oshkosh, ticker symbol OSK, which this is bring some excitement, let's say, to say the least, to Workhorse. It's kind of like a chance, a sigh of relief, or, a sign of hope, too, that there could be some modifications to this. And we saw a big squeeze up to about $19. I didn't sell out. I probably should have. I might even sell out here after market hours after I film this video. We'll see. I'm considering it because I can sell out here after hours, or I might hold through tomorrow. We will see. If I'm feeling a little crazy, I might hold on to this, but overall, good news. And it might not be the best, it might not even work out for Workhorse. It could just go to Oshkosh. It most likely will, guys. This is probably not going to do anything, but we'll see. Never say never, right? And SB, I'm also still in that one. You guys know Neo, I'm also still in Neo. This went down about 10%. I could have added more to it today. I didn't. I might, if it goes low 40s tomorrow, I might be putting in some Neo. And Rocket, let's take a look at how this stock is doing. It actually just reported earnings, and I did not check out the earnings before filming this video, and the stock's up. It looks like it's right around my cost basis right now, and you guys know I don't typically hold through earnings, but in this case, I did. I'm holding on through earnings with Rocket, ticker symbol RKT. I'm in at $20.95. And when it comes to their earnings, let's double check this and take a look. EPS, wow, look at that. EPS, $1.14 versus 87 cents estimated. So they crushed EPS, and sales also crushed. They did $4.7 billion versus $3.92 billion in sales. So I'm happy about that from a brief glance there. And the stock is up a couple percentage points. That is ultimately great. And I think Rocket, mid-20s, it could get there. That's actually my sell target, my first sell target in the mid-20s. And Tattooed Chef, I'm also still in, which admittedly I'm in the hole in this one. And I'm probably going to add more to this as well. A lot of these stocks I want to hold for a longer period of time. Not years, because they are swing trades, but a lot of these stocks are multiple month swing trades for me. And that's kind of how I do it. I mean, a lot of the times, guys, I do shorter term swings, you know that, but a lot of the times as well, or some, some of the times it really just depends on the season, or not really the season, but it just depends on how the market is. I do longer term swings and again some shorter term swings. It just depends, and a lot of these are longer term. So I'd love to know what you guys think down below. What are you doing? As always, let me know. Shoot me a comment, and make sure to also hit that like button. And if you want the real-time buy and sell alerts, call outs, don't forget to check out that Patreon. That is how you get access to that real time throughout the trading day, Monday through Friday. So let's get into, I have 7 stocks here, many of which reported earnings. So we're going to get some live earnings reactions in this video. And number 1, which didn't report today, but I'm still watching it, is Chewy, ticker symbol CHWY. And this stock went down 3.5% today, down $3.70. And what do you know? I mean, it's right at the support of the channel. It's not I don't want to say it's a screaming buy, but based on the pattern here in the past couple of months, ever since the beginning of December, this has been pretty consistent, hitting higher highs, higher lows, and maintaining this channel. And right now, we did break the 180 SMA on the 4-hour, which is a bit worrisome. That was at about 104, 105. We're trading at 101 now. So that is a bit worrisome. But I think if we're able to hold 101 and retake that 180 SMA, break above it, get back into 104, I think that is where we could get into I don't want to say a full-on momentum play, because at 104 there's likely not going to be a ridiculous amount of momentum. But if we could get above, let's say 106, 108, 110, that is where I think we'd be breaking up aggressively here on Chewy. And the target is ultimately the 110s, maybe even 120. And if this uptrend in this channel continues, I mean, the target's going to be mid-120s. I wouldn't be surprised if we did end up getting, look at this oval I'm about to draw, guys, right around here. If we got to this point, if we did a bounce off 110, got to 105, 110, 115, and we did something like that, 120, 125 is the target, and that's kind of what I'm looking at here. And Virgin Galactic is stock number 2. They did report earnings, and the stock's down. It looks like it's down. I mean, it went down 8.4% on the day. It closed at $42, and now in the aftermarket hours, it's at $38. It actually got to a low, wow, of $36. So it's in the hole a ton here after hours. It's down about 10% after hours. So it's down about 18% overall today, including the after hours. So that is really rough. Let's take a look here on the live news tab when it comes to the earnings. Okay, it seems like their loss was 31 cents per share. That was in line with the estimates. And I wonder why this is going down. I mean, I know when I'm looking at companies like this, I'm not necessarily looking at, the revenue, because they're not really making much revenue. Let's be honest. What I'm looking at is the loss every quarter, and the dollar amount in millions of what they're losing, which is something that I'm not catching right here. I'll probably have to look later at the earnings report more in depth. But usually Virgin Galactic, from previous quarters, I remember, I mean, they've been losing $60 million a quarter, $70 million a quarter. So I want to see, okay, is this loss widening, or is the loss slimming down quarter after quarter? That's kind of important to me. And of course, I want to see this earnings call, what is said, future guidance and so forth. That's huge when it comes to earnings. So overall, I mean, Virgin Galactic, it was $62 per share literally about 3 weeks ago. Now it's at 38. And I know a lot of you guys like stocks going up. Stocks only go up, right, guys? But the truth is they don't. They see big sell-offs, and especially the more speculative stocks like Virgin Galactic, they get hit even more than the index, let's say, for example. So if you're interested in buying, and I'm not telling you to buy, you always must do your own due diligence and your own research. research. But if you're interested in buying stocks, now's the time to buy, when the stock is getting decimated, not when the stock is hitting high after high after high. Don't get suckered into that. Not saying that it's bad to do that, because it's good to do that. You make money by buying into momentum, but if you're not mitigating your risk, you can lose a lot of money if it dumps off. And, just looking at this now, it's down 40%. You could have lost a lot of money if you got in at 60 and you didn't set a stop loss, or you didn't have a plan to get out. And, a lot of people look at this and they're scared to get in because it's down so much. But you have to buy into the red if you are interested in companies. And, that's just how it works, guys. A lot of the time, that's what people do. They buy when the stock's down and they make money on the upswing. That's how a lot of people go about things. So that's Virgin Galactic, Beyond Meat, BYND. They also reported. Let's take a look at what this stock is doing. And again, guys, I didn't look at these earnings reports before this video. So they did revenue of $101.9 million versus $103.2. So they missed on sales revenue there. And EPS also missed. Wow, negative 34 cents versus negative 13 cents. So they missed on both, double miss there. And I could just tell by these green candlesticks, take a look here, guys, or this one green candlestick, that Beyond Meat is crazy volatile after hours. And yeah, take a look. It went down to 127. All the way back up to 170 after market, and now it's trading at 148. This is unbelievable. So it literally broke multiple supports and resistances in the past 30-40 minutes after that earnings report. So the market is trying to make up its mind, what direction it wants to go. But overall, 145, 150 is a big level for this stock. That was a resistance all the way from back in July. We got hit there, here twice, 3-4 times, many times in November, December as well. 145, 150 was resistance, and in the middle of January. So I think overall, if Beyond Meat can settle down above 145, 150, that could be a spot where we could slowly start drifting up to 155, 160. The big levels of resistance here are 160, right? We see 165. That's another big level of resistance. And, above 165, there's another big gap coming, maybe 180. So Beyond Meat's another one of those that after the Pepsi deal, they got a big spike to 227. Classic sell the news after that. It dropped a ton. Guys, it's not down just 10%. This stock went down 40% from that 227 high. So kind of like Virgin Galactic. I'm not telling you to buy this, but if you're looking to buy a stock, now is the time to buy it when it's down 40% from the peak. And the more it goes down, the better, especially if you're looking to hold it for the long term. So that's Beyond Meat. Apple is another one that I'm absolutely getting excited about here. I didn't pull the trigger yet, but the closer it gets to the lower hundreds, I am, let's just put it this way, I'm getting very excited, right? So if it could get to those lows from back in October at about $109, maybe $105, that is where I'm going to add a pretty substantial position. 120, maybe 120, I'd consider it a nibble spot, meaning I'd nibble a little bit of shares, maybe like 15% of my goal position. But the closer it gets to these supports I'm drawing right now, okay, take a look. If 120 breaks, this is a big support. We're probably going to go 115 on Apple. 115, the way I do this is, okay, if I have $10,000, let's say, for example, how would I approach averaging into Apple here? I'd probably add maybe $1,500, 2,000 bucks right now. I'd add 20%. If it drops to 14 or 114, 115, I'd add another, let's say 15%. That'd be 35%. If it drops to 110, I'd probably go even heavier. I might add 25% at that point, bringing us up to 60%, right? Goal position. And maybe you don't even buy it in this many different lots, right? I'm just giving you guys examples. But if it gets down to 100, even 95, you could go with the remaining 40% if I did that math right. You can go even heavier at the lower price. That's kind of how I'm looking to approach this, roughly, right? And it's not really breaking up quite yet. In fact, it kind of still looks like a falling knife, so you must be careful. But Apple, I really like it. CRM is another one here, which they reported just now, and by the looks of it, the stock is crashing. It closed at 231. It went down 4% at the market close. Now, after hours, it's down to 220, down another $10 from the market close, which means it's down 5% after hours. So in total, today, including after hours, it's down almost 10%. And the earnings, they must have not been great. It seems like, okay, EPS came in at $1.04 versus 75 cents, so they beat EPS. And revenue came in at $5.8 billion versus $5.68 billion. They raised guidance. Okay, what's going on here then? It seems like, okay, shares are trading lower after the company reported Q4 earnings results and issued guidance. That's one of these, probably a Benzinga article there. Either way, I mean, it doesn't seem like the guidance is that bad. In fact, the guidance is above what they expected. It's probably one of those scenarios where, unless I'm missing something, but it's one of those scenarios where the market does irrational things. You guys have to understand, I mean, just because a company reports solid earnings doesn't always mean the stock goes up. Sometimes the stock goes down. The market does just odd things. Same way you see a stock report bad earnings and the stock goes up. It just doesn't make sense sometimes. So CRM, I'm not necessarily looking to get into it here at 220, but if it could retake 228, break above 230, maybe that would be a good spot to enter. I like 230 on this one, so I'm going to see if it could rebound. Amazon, out of big tech guys, Amazon and Apple at this point are the two beaten down ones that I like. And have you noticed, I mentioned this earlier, I believe on Discord, have you noticed that Google has not been going down as much? Google's been holding up. When it comes to tech in general, Google's been crushing it. And I'll be honest, I used to be an Apple guy, Amazon, like those are my two favorite tech stocks, but Google, I'll be honest, these past couple of months, Google has been slowly creeping up to that number one favorite list for me, or number one stock, my favorite one at this point. It's getting there. If not, it might already be there. They're just an awesome company. I mean, YouTube and Google, the two biggest search engines, guys. This company is a beast. And back to Amazon, done touting Google there. Let's go back to Amazon. We can see this is actually pretty oversold. It looks like a falling knife. 3,000 is a big psychological level. It's also right around the uptrend, the support rather of this wedge. Maybe, I don't want to say for sure, but it could, let's say it could hold 30,000 or 3,000, 30.50, and maybe we see a push back into 31, 3,200. That's kind of what I'm looking for here on Amazon. And Splunk, somebody asked me about Splunk earlier on my comments, so I'm going to cover that one here right now very quickly. And I'm not too sure if you guys remember, but take a look here on this chart. We covered this stock couple months ago. I think it was like 2-3 months ago. Based on this chart, you can see I did analysis on this. This is the analysis from when we covered it, and you can see it's moved a bit from that analysis. And it seems like last time I did that analysis was probably back in December, maybe early January. But we were talking about how Splunk was in a downtrending channel, and it was holding it beautifully, making lower highs, lower lows, maintaining it. And we called it out here, I believe, from 150. It ended up going up to 180, hit another lower high. It dumped off to 160. And now take a look at it, guys. It just hit a lower low today, 145. And it's pretty much at that lower portion of this channel. And let me just quickly redraw this and tell you guys what I think is going to happen here on Splunk. I think this is a good call out because it is right at that same level that it was a couple months ago when we were talking about it, right before it went up and saw a nice pop because it got pretty oversold, got to the bottom of that channel. And again, that's exactly where we are right now. We're right at the bottom of the channel. And yeah, it could go maybe 135. I think 135 would be extremely oversold. But if we got there, that could be a decent spot. And overall, the idea here is we're oversold. We're probably going to rebound a bit and see a relief rally, which could put us anywhere between 160, 165, maybe even 170 towards the resistance of this channel. And I mean, at some point, guys, stocks that are beaten down, they're going to bounce back. And I think it's time for Splunk to bounce back. It's getting there. So that's it. We're going to wrap up the video here. Hope you all enjoyed it. If you did, hit the like button. Make sure to subscribe to the channel. Let me know your thoughts down below in the comments. As always, I would love to know. Don't forget to get your 2 stocks from WeBull. Those are valued up to $1,600, and your $30 from M1 Finance. All of those are free. Link down below. And you guys can check out the Patreon if you want real-time buy and sell alerts, real-time call-outs if you want to be able to talk to me throughout the day via DM. Patreon is the best spot. And you could also get morning update videos every single morning, Monday through Friday on Patreon. Check that out. Link down below. And that's it. I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Peace out.